So I think as you head out deeper into this decade, we're more and more likely to have these kind of ongoing, higher commodity prices, most likely, especially when you combine it with currency itself losing value. As much as people like to blame the Fed, a lot of my blame is say back in the Greenspan era where they did have more levers they could pull. They could have made better choices, I think. And now they're stuck in a corner where they don't really have that many options, and so you're choosing between bad options essentially. Information travels faster now,
Yeah.
whether in meme form or anything else. And so in the 1940s, you would get a newspaper, you
You'd
know,
get away with it. Yeah.
yeah, you get away with things, and now it's like, Twitter's monitoring it minute by minute, and people that work in like a grocery store can tell you who the chairman of the Federal Reserve is, and like, it's not, information is traveled far quicker, and more people are aware of it, and that's part of the populism that we find ourselves in now, where everybody knows something's wrong with the financial system. There's different opinions as to what's wrong with it, different levels of information about what might be wrong with it, but it's kind of something that we all understand to different degrees. And information travels super quick, and so it's really hard to keep people in the dark about what's happening. So the stimulus checks go out, they allow those changes in consumer behavior to happen, but then you run into real world supply constraints. And so if you look at that chart that you're referring to, our purchases of goods skyrocketed, whereas our purchases of services took a lot longer to recover, because that's things like restaurants and travel and hotels, and things like that. And so, especially in the United States, where we specialize in services and we exported most of our goods to other countries, that's an issue. So that's why our trade deficit got a lot worse this year, or over the past year, because we kept our demand high with stimulus checks, but a lot of that just goes straight out the door to China, because we're buying more from them than they're buying from us, because they're not doing as much stimulus, and they're not kind of boosting their demand as much as we did. The stimulus bills earlier were these fast acting ones. So people got money right away. So they could either, they could either put it into a home improvement, they could put it into something else, they could put it into meme stocks, Dogecoin, whatever they want to do. Whereas infrastructure is going to be like a multi-year thing. We still don't know exactly how big it's going to be. We know it's going to be filled with pork. And so it depends how useful and productive some of that ends up being. If you spend money on things that are not productive, then it would tend to be inflationary. If you spend money on things that make things far more efficient, it can counterbalance some of that spending. And so it really kind of depends on how effective that spending is, and over what period of time. Now, a lot of people think that certain materials like copper or silver or nickel are likely to have this constant source of demand over the next decade, due to electrification and infrastructure, and things like that are basically potentially propping those things up. And another component to inflation is that, commodities tend to go through these big, like roughly 15-year cycles, where you have a period of oversupply, so prices collapse, so nobody puts money into the space, and eventually demand keeps going up over time, while there's not a lot of new supply coming online, prices go up, and so you pull more people into the space, and you get oversupply again. And so the past like decade or so has been a period of commodity overabundance, or at least most commodities. So we had this period of commodity oversupply, but now going forward, because of those long periods of low prices, there hasn't been a lot of new supply coming online. So there's no giant new copper mines. Well, there's some, but there's not a ton coming online. And we're not investing in a lot of, say, long-lived energy projects. And so I think as you head out deeper into this decade, we're more and more likely to have these kind of ongoing, higher commodity prices, most likely, especially when you combine it with currency itself losing value. And yeah, you basically have these giant commodity cycles, that occur at pretty regular intervals. And obviously, you have to monitor the details to see how far you are into that interval, because they're not going to be exactly the same. It's going to depend on, just different human choices along the way. But most evidence shows that we've been through this pretty long period of commodity oversupply, and for many types of commodities, now we're in, or at least we're looking at, a pretty good potential for more supply constraint, and tighter supply demand spreads. all developed countries kind of outsource cheap things like making a tire, for example, like clothes or like low value add things. But the United States went further and faster than many other developed countries, where we hollowed out our industrial base to a much bigger degree than, say, Germany or Japan or even Italy, like a bunch of other countries that didn't really have that problem. And so we accelerated that more than others. So we totally disconnected labor productivity from wages. So wages kind of went flat in real terms, and productivity kept increasing because we arbitraged labor around the world. Cheaper environmental standards, cheaper labor in different countries. We can pollute over there instead of at home, and so there was kind of like this big arbitrage that helped keep costs down, but we sacrificed resiliency, and we kind of sacrificed, in the United States at least, we sacrificed the blue collar labor force more so than most other developed countries. And that, global trade as a percentage of GDP reached a peak in around 2008. And so that was like 60% of global GDP, which is actually a really high number if you think about it. That global trade as a percentage of global GDP was like 60%. It's kind of an intuitively high number. If you look at the trade deficit, it really kind of takes off at around 1974 or so, kind of a few years after that. And so it's tied to 1971, but it's really the system that came after it, which is the petrodollar system, where we started basically exporting dollars, and so that became our major export, which displaced our other goods. Essentially, we basically priced it so that our exports were no longer competitive, and our import strength was very strong, and so that benefited people that work in healthcare, technology, finance, government that didn't have their jobs exported, but then they got the benefits of that system. Whereas the typical blue collar worker that, say, made cars, right?
Hmm. Hmm.
Skilled worker, they got some benefits from the system, right? So their dollar, maybe retained more strength than it would have, but they sacrificed a ton for that as well. They either lost their job or their wages were severely depressed because you had competition from other places. And then we really kicked it into high gear in the 90s with NAFTA. And then in the early 2000s by helping to get China into the World Trade Organization. And so we've had this cascading series of things that really led the United States to have this big structural trade deficit in a way that many of our developed peers don't have. And so we have a higher level of wealth concentration than virtually any other major developed country. If you have a rapid change in consumer preferences, uh, but you have industry that might take a few years to adjust to that, then you can have a pretty significant bottleneck. And an example would be that if everybody wants suburban homes, they want to change the location at the same time, and you only have so much sawmill capacity, well, then you can have a spike in lumber prices. The same thing is if people buy more electronic equipment than they would otherwise because they're stuck at home, then and you only have so much semiconductor capacity, for example, well, now you have a problem.